So how's your arm? Looks broken. Not that kind of arm, this kind of arm. Adjustable rate mortgages. They have been considered the villain for why more people are losing their house than any time in history. Adjustable rate mortgages. What's the answer? Well, loan mods or loan modifications are all the rage. The pundits, financial gurus, are predicting more than 10 million of them this year. In this short video, I'm going to give you a website where you can go view the frequently asked questions about loan mods by homeowners like you and I. Give you a couple examples and give you the reasons why banks and homeowners both benefit when a loan mod's done. Example 1, homeowner had a 7.8 mortgage. When they were done with the law firm that we use, we have 9 of them actually, they ended up with a 6% interest rate. Their payments went from $5,200 down to under $4,200, and that included $800 in principal reduction where the original $5,200 did not. So that's $1,800 in either immediate cash savings or equity building, and every month it grows as the principal increases. Do the math on that, it's over $20,000 in cash savings and equity building each and every year. Here's another example. $35,000 or $356,000 was the original loan balance. When the law firm was done, they'd gotten it dropped over $35,000 down to $320,000. That's $35,000 in instant true equity. Their payments went from $2,100 and change to under $1,300. That's $850 per month extra cash in the homeowner's pocket. And one other little thing, they got a $2,100 late payment completely waived. So you look at it, $35,000 in savings in the form of immediate equity, $800 and some difference each and every month, and they eliminated the negative amortization loan for life. Why are banks doing this? Well, big banks, new banks, old banks, all banks, not all, most banks are waking up to smell the coffee and recognizing that they are by far better off dealing with a homeowner who is already living in a home, already used to making a mortgage payment, wants to be there, than spending thousands of dollars foreclosing. Actually, it's tens of thousands. At national average cost of a foreclosure is over $50,000 when it's all said and done. Additionally, a bank, when they foreclose on a home, have to put money into reserves. So says the federal government. Then they have to fix up and resell the house. So you can see that dealing with a homeowner on modifying their existing loan is better for the cash flow and better for the balance sheet. Balance sheet is how they borrow money so they can loan it to you and me. How about for us, the homeowners? Why is this an advantage? Well, actually, there are a bunch of advantages for us. First off, if you're using a reputable organization, they will evaluate your finances free of charge. A loan mod does not affect your credit score. If you haven't made a mortgage payment, that can, but this is one of the few times, this is the only time in history that I know of where you can have horrible credit and get a better mortgage than someone with perfect credit because of the loan modifications that the banks are willing now to do. Imagine the stress relief of knowing you've got a payment you can live with, knowing that it's going to be permanent, knowing that some of the past due amount or all of it can be forgiven, and the loan amount, as I just showed you, can be reduced. To view the 22 most frequently asked questions about loan modifications, go to Loan Mods or Us. Some of those FAQs are, what do you need to qualify? What exactly is it? What about Obama's plan? Does that impact me? Can you do it yourself? What's a hardship letter? Is this the same as debt consolidation? And why should I even consider using an attorney? All of those and more answered at Loan Mods or Us. Please, go check it out. It doesn't cost anything to find out about this and decide whether a loan modification is something that you should consider. At Loan Mods or Us, you'll see that we use a network of 9 law firms nationwide to represent the homeowner if you're accepted as a client. After accepted, we have a 97% success rate at getting your loan modified. And as I mentioned a moment ago, there's no upfront fee to find out whether or not you qualify to be represented. If you do qualify, and if you're represented and the attorneys are not able to get you a loan modification, you get your money back. There's all my contact information. I'll give it to you again in just a moment. Your choice is real simple. If you're behind on your mortgage or think you're going to be behind, call the bank. You're welcome to do that. Or you can have one of 9 law firms call the same bank. Difference is this. When you or I call, we get an $8 or $10 an hour clerk that barely speaks English. When a law firm calls, it's done 30 or 50 or 100 loan mods already. They talk to the vice president, the decision maker, and they also know what that lender is willing to do and what they aren't. Learn more at Loan Mods or Us, and call me, email me, or just fill out that short form on the website, and I will gladly get a hold of you. Thank you so much for your time, and may God richly bless you and yours today.